In this video, traders, I want to look at candlestick strength. Stay tuned. Hey traders, warm welcome to you. Thank you so much for joining me. Okay, so I want to look at some of the kind of more usual candlestick patterns that we get, or shapes on the individual candlestick that we get, and look at how the textbooks interpret them. But I want us to be a little bit smarter here and think a little bit clearer about what they actually mean, so we can categorize them depending on where they occur on the chart itself. All right, so let's start off with a standard kind of solid green candlestick, bull bar, whatever you want to say. Opens at the bottom, closes at the top. That's pretty strong, right? That is pretty strong. And especially if you have a good range and if you have some sort of volume indication, let's say you're not trading Forex, then a good volume. Because what does that indicate? Let's just think about what that indicates. That indicates the price opened here, and during that period, and by the way, let's assume that all of these are one day, because we can get some nuance and slight difference if we're talking about intraday candlesticks and bars. Now, there are similarities, but there's so many edge cases. You know, if that occurs in the middle of the day and we're right in the middle of the range, then that's irrelevant compared to, you know, a daily chart where it's standing out a lot more. And don't forget, the difference is when the candlestick is having a longer period of time, like a whole day, it's a longer and more certain change of sentiment than a minute, for example. A minute could be anything. A minute change in sentiment of that could be anything. Could be just an order that has to be done, the finish of an algo finishing up, fat finger, could be anything, right? Whereas if it's a whole day and the price has changed that much in a whole day, that's going to be a significant number of participants all agreeing on something. So there's much more weight to it the higher time frame you go. That's why we do multi-time frame analysis, guys, why we kind of do top-down approach to trading very often. All right, so imagine you've got this scenario. You open here, you close here. What does that mean? It just effectively means that during that trading day, the auction process has auctioned higher. There has been more demand than supply. The demand has been more aggressive and moved up and up and up and up and up and up. And we've got to the point now where actually the high is significantly higher than the close. And if you've got a decent range on it and a decent volume, that's going to be pretty bullish. Okay, now what does this show? This one is slightly different in that we actually try to go lower. Now this is where I kind of differ, my thoughts on this differ from perhaps the textbook. The textbook are going to say, hey, that's super bullish. Open at lows, close at highs. And yes, in the right circumstances, I 100% agree. However, this is more interesting. This is when we get more interesting. I kind of group some of these up as well. I'm not going to waste your time going through each individual one, but these sort of scenarios here are very different compared to this, in that we actually opened at a neutral level, if you like. Both of these is consider them to be, let's say, neutral. That was open in the upper half and this one's open in the lower half, but we actually pushed lower intraday and that was rejected. And so this to me is more interesting depending on where the position is, because if you push lower and then it's rejected, that tends to be the start of a move. It's like, okay, we've had some selling coming in, someone's pushed it to the downside, but at that point in time, it's been rejected and pushed back. And so the follow-on candlestick from these rejection type candles tends to be this. Now, that's not always the case. I'm generalizing a little bit here, but you know yourself, you look at a chart, very rarely do you just get that out of nowhere. You often get it after a few reds, then you get this kind of two-way trade, and then you get this solid green. So for us as traders who are trying to predict, really, the best thing we want to predict, if we think about it, would be, hey, where can we see these? If our job was literally just to go out and say, right, where's the best point to look for these? We're going to probably look at the structure of these to find this one as the second or third candle, rather than guessing when that's going to appear from nowhere, because that's where we're going to make money, right? So this is this scenario where we kind of pushing lower, rejecting, moving back to highs. Now, what about this one? So this one, you'd think, well, is that even better? Is that better because it's rejected so lower? This is where we start to get into this grey area, because this is okay, right? We've opened here, we've pushed lower, pulled back up. We pushed a little bit lower, pushed back up. Your argument now is like, okay, which one's bullish, more bullish? Well, actually, when we get to this level, that's quite a big excursion lower. That's gotten quite deep, right, from the open. That's quite a significant amount of selling before it's reversed. And so you think, okay, there's a lot more weakness there. Whereas this one, okay, it's tried and then it's spent the rest of the day rallying. Now you can imagine what the intraday chart looks like on this. It's kind of, okay, we've opened here, we've pushed lower, and now we've spent the rest of the day rallying. That's much more firm and committed strength versus, let's say, this one here. this is like, all right, well, actually, we've opened up here, we spent a lot of time to the downside, and then we finally kind of come up and closed here, giving us that type of shape, which is the more bullish. Now, you might, if we just look at those completely without any other context, which is dangerous in trading, admittedly, but we'd say that's probably more bullish, right? Because it's just not gone lower, and maybe it's had a double bottom down there, and it's tried, it's found a floor, it's sprung straight back up, versus this, which just kind of kept going and going and going. Now, it's where it gets more interesting and why we're going to the subtleties and nuances of trading and where the edge lies as a retail trader. If this has happened after, let's say, negative data, I love this type of thing, because this is where we get this scenario where negative data drives it lower, say economic data, if you're trading a company, some sort of earnings that aren't so great, but the sentiment is just bearish sentiment. You've got supply, and then all of a sudden everyone goes, actually, you know what, it's not too bad. And then if you get this, and the angle and steepness, the angle, let's just say here, is very, very steep, and you have this as a shallow kind of trend down, and that's like a more of a panic buying, that's much more bullish. And so the point, guys, of the video is to say, hey, it's easy to kind of look at these and say, well, textbook says that's the strongest, not strong, but it's the context of how it happened, which is where the edge comes in for a retail trader, because all we're trying to do is find out when we can buy, the assumption that people are going to buy after us to push the market higher, where it can go short for it to go lower. So if we have this scenario, let's say it's the last hour of the day, all of a sudden that's real big strength coming in. The likelihood is, and it closes at highs there, and it's that, the likelihood of the next day being something like this is way higher than if we have, and everyone go, well, that's quite a strong candle. But if that's just ground up and it's been a shallow trend and it's just chug, yes, it's strong, and yes, you might get a follow through, but is there urgency there? Probably not. But versus, you know, a candle, and actually don't forget, that doesn't necessarily have to be that shape. You know, the open could be, kind of getting a bit crowded here, but imagine the opens here, it could have done this, it could have done this, could have been sitting in a range for ages and then close at highs. Is that bullish? That's not as bullish as that, in my opinion. Okay, it has broken to the high side. Yes, there's opportunity for an intraday trader, but from a day trading, from a kind of swing trading perspective on a daily chart, it's far more effective to see this sudden change of sentiment, boom, flying to the high side. So I urge you to dig in a little bit deeper into these candlesticks. And then we've got this type of thing here, right? And you could say, well, if that's green, is that bullish? And then not really. Because even though the close was higher than the open, you've rejected much higher price here. You have, you know, this is potentially almost bearish in a way, and you could argue that actually with a little bit more time before the bell, that could have easily closed down here, and all of a sudden that could have been this shaped candlestick and have been red. It maybe was just time that stopped it from being flipping to red. So, you know, it's all very well to have these candlestick patterns, and there's so much information in them. Of course, this is why we use them, right? Candlesticks or bars, same thing pretty much. But looking at how that candlestick pattern was formed gives you a much better feeling on the strength of that candle than actually just looking at it visually. So if you're in a chart situation, you're about to make a trade decision, and you see the candlestick and you look at a daily chart, go a little bit lower and say, okay, those three candles are interesting to me because I want to make a decision based on those three candles. Fine, that's how you make a decision. Go a little bit lower time frame if you're not used to it, and just look at how those candlesticks were formed and step back and think, okay, this is way stronger than this. Even though the shape isn't perhaps triggering me to get involved in it, actually, that's a really decent candle. And position of it in the daily chart is really strong as well. That's adding up for me to take a trade. And so rather than just looking at traditionally and going, oh, that's the strongest chart, that's the strongest, and you see these posted on social media and stuff, and a little kind of cheat sheet of which is the strongest candle, and it's fine, it's a good place to start, but digging that one step, doing that extra bit of legwork, and just looking in and saying what actually happened to that during the trading day that made it print that shape of candle can give you just that extra bit of edge, and you can then say, hey, listen, this is a way different chart to that, that's a way different chart to that. How am I going to interpret that? How does that fit in with the broader term and longer term thesis? All right, guys, take care. Keep your risk managed. I'll see you in the next one. Bye-bye.